Hey traders, and welcome to another episode of Haniva Trade Academy. Today, we intend to introduce you to a simple and profitable trading method. This strategy can be used by both beginners and professionals without the need for any prior training. In most tutorials, trading in trending markets has been discussed, whereas more than 70% of the time, the market is ranging. Imagine being able to trade when the next market trend is not yet determined and the market is ranging, so you don't miss any trading opportunities. In this video, we will talk about the following topics in order: introduction to the rally-base rally and rally-base drop patterns, types of bases, standard bases, how to trade in bases, additional tips for better trading. We'll see you after the intro and disclaimer. In price action, there are two popular and widely used patterns: the rally-base rally and rally-base drop patterns. In fact, all price movements are either rally-base rally or rally-base drop. These patterns can also be drop-base drop and drop-base rally. Look at the chart. In this chart, you can see how the price moves with a combination of these two patterns. The rally-base rally pattern starts with an upward momentum move, then a pause and consolidation, and then another upward momentum move. We call this pause and consolidation a base. Bases can be horizontal, upward, or downward. Similarly, the rally-base drop pattern consists of an upward momentum move, a base, and a downward momentum move. In this pattern, the base can be horizontal, upward, or downward. Therefore, all price movements are formed by these four patterns: rally-base rally, rally-base drop, drop-base drop, and drop-base rally. Hence, this pattern is the most important pattern in price action analysis. If you want to stay updated with new tutorials and price action updates, subscribe to our channel and hit the bell icon. Types of bases. As we mentioned, bases come in different types. Bases can be in the form of standard or horizontal bases, upward CP bases, and downward CP bases. We will teach you about upward and downward CP bases in the future, how to trade in them, and introduce important areas of CP. The goal of this video is to review standard bases and how to trade in them. A standard base forms when the price, after forming a leg and the first reversal candle, fails to form a pivot. I have placed a link to the complete pivot tutorials at the top of the page for you to see. In fact, after the formation of the first reversal candle, the price fails to cover the hypothetical line or master candle, then moves almost in place for 3 or 4 candles. It's better if all candles are either spinning or standard. A standard candle is one whose length is between 80% to 120% of the ATR, and a spinning candle is one whose length is less than 80% of the ATR. The in-place candles mean that none of these candles can close higher than the highs or lows of the candles before them. In this case, after the 4th candle, we have a standard base like the figure. How to trade in standard bases. We can trade as long as the price moves inside the base, but we must ensure that 4 conditions are met. 1. Whenever we see a base in any time frame, we must have a leg in the same time frame. Look at these two images. On the left side, there is no leg before the base, so in essence, the base has not formed, and we are not allowed to trade in this way. On the right side, we have a leg, and after that, the base has formed. 2. We must identify the highs and lows of the base. We can draw these levels from the common open and close candles and the highs or lows created on both sides of the base. Note that these two levels should be almost equal. 3. Then we move to the trigger time frame. In previous videos, explanations have been given about time frames. Please watch the videos in the description to understand this. Of course, to improve the risk-to-reward ratio, we can also go to a lower time frame below the trigger. 4. When the price reaches any of these levels, we enter the trade by breaking the trigger line. Helpful tips. 1. In a base, we can trade until the 7th candle is formed. After that, the base will break from one side. 2 bases usually will be hunted from one side before breaking. In the future, We will teach you how to trade bases when they are hunted. If you enjoyed this video, please like it to support us and share it with your friends.